Today is Wednesday, October 5th, and I made a series of trades today. And as usual, unlike the times when I tend to hold for a painful position of losing, um, and and I hold and I keep holding on to it, feeling the emotion. And then I get to the point where I get I get a migraine headache because I'm holding on to something that is essentially just taking everything in my capital, taking all my capital. Then I just thought to myself, okay, so today, and now that I'm on this 90-day challenge of making my trades consistent and profitable, that today was a reversion day. And reversion day embedded in a cup and handle formation. Essentially, that's what it is. The reason why I say that is because there was a strong green days the past 2 days, and this dip is essentially forming a cup, and a handle is being formed, and that is essentially a bullish signal. So what I suspect is that from now on, for the foreseeable future, the market will tend to trend in a bullish manner. Now, segueing into the migraine that I had when I'm losing money, somehow the migraine also is similar when the trade goes in my direction. So when the trade goes in my direction, there is a reverse effect. It's an intense migrating feeling when the trade goes up and then stalls and reverses a little bit, or stalls or reverses, and that just when it keeps going up, then the feeling, the emotion is quite different than when it attempts to fall back. So after a sizable gain, there will be a retracement, and it's a natural part of progression, moving the stock moving upwards. And when that happens, there is the reminder of the emotions and the feelings and the migraine that I usually get when I have a losing day, and therefore that also tends to cause me to exit the trade, although the intensity level is less. So what I need to do is, and what I've noticed is that I do miss quite a bit. And I have to distinguish between a true reversal and a slight pullback on its way to making greater gains. So if I can somehow distinguish between those two things, that will allow me to hold my winners longer. And essentially, when that happens, that essentially will cause my winning trades to become very, very big, and then determine what causes a slight dip to turn into a massive dip. Now, if I can figure those 2 points out in a divergent manner, in a looking at from both sides, straddling between the event horizon, the horizon. There's a horizon. So if there's a horizon at which point that I have squeezed my way into, and that means that if I'm on this side, which is the upside, then how do I maximize it for those days when it pulls back a little bit and then shoots up? and then wait for that true point where it is intended to, make a drastic move down. Then I can get out at that point to maximize my gain. And then on the flip side, when on the when on the when I'm on the other side of losing, then how do I know that it is just a dip and it is ready to recover based on my thesis, or will it continue to and drastically move in the direction that will deplete my account? So if I can figure those out wrapped around the event horizon, I will be able to maximize and consistently improve on the trades that I make.